In a report put out by Goldman's precious metals analyst Lena Thomas and Dan Struvin, I'm not sure how to say it, dated July 22nd, the day after the $50 sell-off, the bank reaffirms its case for stronger gold prices, reinforced by resilient Chinese demand.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we're going to touch on Goldman's new gold report, which itself covers China demand, and we're going to touch on India's change in gold and silver import taxation. First, let's go through the markets. The dollar is down 5. I'll leave a chart up for you there. At 104.41, the 10-year yield bond is 424, down 1 basis point. The S&P 500 is down 41 at 55.16. That's reasonably new this morning, by the way. The VIX is 1531, up 60. Gold is 24.11, up 3 and change. Silver is 29.29, up 5. Copper is 416, essentially unchanged. Oil is 78.97, up 23. Natural gas is 211, down 2. Crypto is mixed. Bitcoin is up 600 at 66 and change, and Ethereum is 34.65, down 12. The ETH ETF was launched yesterday, so people are now putting their money into Ethereum. I wouldn't expect it to be as exciting as Bitcoin, but you never know. Palladium is up 16 at 938, and platinum is 961, up 19. Gold, silver hovering at 82. Soybeans, corn, and wheat are down, up. So let's call it unchanged, and up slightly. 11.20 down a penny, 3.98 up a penny, and wheat is 5.52-ish, up almost 2 3/4 pennies. Okay, there's a gold chart. I'm going to just lay it out for you right now. The chart. Here's the daily. There's the peak buying. There's the beginning of shorts, smarter shorts, allegedly getting in. That's fun shorts. The first dip is bought by macro discretionary. The second dip is not bought and continues lower, and it stops here. This was not a level for me to look at before, but now it is. Why does it stop here? It stops here because it's 2,400. That's why it stops here. And the next day, you would think it would at least try a lot lower before bouncing. It tries a little bit lower and then magnetizes at 2,400. And right on this day, between Monday and Tuesday, actually Tuesday Indian time, India announces their tax reduction. So there's your demand right back there. And then we have these 2 updates. Well, so far today's an update, which brings me to this. This is an algo. Not necessarily literally an algo, but this is a short covering. All right. Anyone who got short in here, who's smart, is covering. People are going to short this market. They're just not going to be as comfortable staying short. The 45-degree angle is the giveaway, and there are other things that I'm not going to discuss here. But when you look at it from an hourly point of view, if the market breaks this line, that buyer is done. And then you have to look at this line and how important it is again, right? So this is short covering on the back of India news, taking profits. Silver, similar idea. I didn't draw the line there, but this is copycat. Whoever shorted silver is trading in here. So these 2 markets are lockstep. Obviously, gold has been relatively strong compared to silver for the last 72 hours, but the players are doing the same things in different magnitudes. All right, let's get to the stories. All right, we're going to talk about Indian gold demand, and we're going to talk about the India-China Gold Cooperative in premium. Goldman says buy a dip and India slashes gold and silver taxes. We'll be covering that in a second. Here's the front page. Here is the Goldman analysis And our breakdown of it for premium subscribers, it's all there. Not yesterday, but last week, gold's next 6 months trading. Here is the India slashes import tax on gold and silver. We're going to cover that today. And we would draw your attention to South African gold miners for a second. They had a very strong day yesterday. Goldfields was up 2.3%, and Anglo Ashanti was up 1.8%. So it's starting to bleed. The whole mining thing is starting to bleed. Anyway, let's get to the topics. First one is we'll discuss the India one first, right? India slashes import tax on gold and silver. A few days ago, we described right here why it is extremely significant that India's gold demand has been inelastic for the last 3 years, and India needs the gold. They're buying gold regardless of the price. The Indian government is buying gold regardless of the price, which means they will print more money to buy gold. And other things too, but you don't do that with a pet rock. You say, all right, when it drops, I'll buy it. Today, Reuters, atrocious spelling, I'll edit that later. Reuters reports yet another uptick in Indian demand. India slashes import tax on gold and silver to tackle smuggling. Well, no, that's not what they did that for. Mumbai, Reuters. India slashed import duties on gold and silver on Tuesday in a move industry officials said could lift retail demand and help cut smuggling in the world's second largest bullion customer. India was the first largest household bullion customer. That's changed because of China. All right. What does this mean? This is bullish for price demand and one reason the market stopped dropping Tuesday. Beyond that, we'll tell you how to interpret it in context of China, BRICS, as well as global demand in a note at bottom. Hint, they need the gold. Next topic. China's structurally resilient gold demand. That's the title of a Goldman report put out 2 days ago, the day after the essentially 2% sell-off in gold. So you should interpret that as significant. They're not hiding. In a report put out by Goldman's precious metals analyst, Lena Thomas and Dan Struvin, I'm not sure how to say it, dated July 22nd, the day after the $50 sell-off, the bank reaffirms its case for stronger gold prices, reinforced by resilient Chinese demand. Their focus, however, for this report is on physical demand in China within households as opposed to official buying. All right, we have the full Goldman Sachs gold report and Gold Fix analysis here. Right there. Click on it. It's right there. All right. The bottom line on that is households have dropped off in gold demand over the last 2 months by almost 16%, which is significant at the household level. And it's a comment on several things. In no particular order, they have less money to spend. So Goldman has a model, and the model has household income. The model has interest rates. The model has gold price. And what's the fourth parameter? I'll remember as I go through this. The first parameter, household income, has dropped, so they're spending less on gold, right? They have less extra money to spend. That's the first thing. The second thing is rates. Bond rates have been decreasing for over a year, and that's been a driver to buy gold. Fear. This is the other one. Their fear is a factor. What's a Joe Rogan thing, right? Fear is a factor for gold demand in China, in the sense that if the economy gets too bad, people will buy gold like we would buy bonds. So it's a flight to safety concept. And the fourth one, which I already mentioned, is price elasticity, or price driver as demand. Now, what Goldman notes in this report is that of those four factors that go into their model. China gold demand has become price elastic on the upside now. So they're balking at buying at higher prices. That's it. And they handicap that the market will, China gold demand will bounce significantly on a 10% drop in gold. So if the market drops $250 over the next, say, 3 months, which I do not think it will, but it could, put your buying shoes on. Same thing goes for silver. If gold drops $250, buy silver, right? Because silver is going to be down, 10, 20%, and that'll be a buy. Why am I saying that it won't happen, or if it does happen, buy it? Because between now and the election, there's going to be buyers. I don't care how catastrophic the news is, unless aliens have landed that are giving us free gold and silver will be bought on the dip by these people. All right, moving on. Market news was the driver of stocks yesterday, and stocks were weaker on the back of earnings were slower. So there's Google. Apple is working on a foldable phone. I want to throw this out at you. Apple's working on a foldable phone. That's not market driving news, but if you're old enough, most of you probably are. When the cell phones came out competing initially, it was the clamshell, the closing phones, the Star Trek phone, versus what they used to call the Hershey bar or the chocolate bar or the candy bar, whatever you want to call it. And everyone laughed at the candy bar, the chocolate bar, because it was big and clumsy, and everyone went with the clamshell. It was the Nokia era. That was the Motorola flip phone. Remember that? Well, those are back, and they're leading the charge in China. I think Samsung has a nice one, and those are coming to Apple. I would note, if you're a person who owns Apple, this is not an innovation. Apple's not innovating. Apple's following. Apple does follow Samsung in many areas, like cameras and what have you. But they can afford to do that. But another comment is, and this is very sociological, flip phones deprioritize use. Okay. Phones that are open all the time, you're looking at all the time. But the ability to close a phone is going to make people use them a little bit less. I'm just saying that's part of the deal. All right. Tesla's profits slumped. U.S. consumers embraced low-cost e-commerce sites brought a quite explosive volume of shipments, but failed to prevent. Okay, whatever. General Motors is raising several key financial targets. The first U.S. ETFs that invest directly in Ether, I made a comment on that, made strong debut, strong but not awesome. There's always selling in Ethereum. And home prices hit a new high in June for the second quarter. But new home prices, for the first time in a long time, are more expensive, less expensive than median home prices. That's right. New home construction is now less expensive at the median than existing home construction. And that's a sign of a slowing market. Moving on. Politics, geopolitics, nothing completely new there. Data on deck today is 10 a.m. new home sales, which will go further to that concept. Okay, so stay with us and we'll go through very briefly the comment about Indian premium. Let's take a look at the markets again. Gold is up 2 and change. I was short gold for the last 3 days, and I covered yesterday. Small, nothing big. I just thought we'd have a quick washout, and I got lucky. And I want to short it again, don't get me wrong. But as long as this is here, no way will I short this. And if it gets below here, I'm not going to short it. If it gets below here, I will short it. And that's like saying I'm going to trade momentum lower. And that's kind of how it works. On the daily basis, if you look at it on a daily basis, this is a new line for me. It's not an old line, so I don't really have a lot of faith in it yet. But I do think there's going to be buying in there because of 24. 2,400 is an option-related strike. Okay, there is open interest there. And between 23.85, it'll be bought. Between 24 and At $24.15, it'll be sold. So in that $30 range, it might be butterfly time for those of you who play at home.
Well, thanks for joining us here today for the Morning Markets and Metals with Vince Lancy, which is brought to you each day by Miles Franklin Precious Metals, who we encourage you to use when you're buying or selling gold or silver. We're proud to be a licensed representative for Miles Franklin, where this week's specials include constitutional half dollars for only $2.50 over spot and 1/10 ounce American Gold Eagles for only $39 over melt. And you can contact us for more information or to place an order by calling 833-326-4653 or emailing arcadia@milesfranklin.com, where we'll be happy to get back to you. And you can also reach me if you have questions that you'd like to discuss, and we'll be happy to get you set with all of your gold and silver needs. So call us at 833-326-4653, and thanks again for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.